I'm Matt Bishar with NAREITsREIT.com. I'm here at the New York Hilton for REIT Week 2017, NAREIT's Investor Forum. Joining me today is Chris Volk, the President and CEO of Store Capital. Chris, thanks so much for joining us.
Matthew, it's great to be here.
Now, a hallmark of Store Capital's business is the diversity of its portfolio. Why, in your opinion, is this so important, particularly in the net lease space, and is it possible for a portfolio to actually be too diverse?
Well, the number one goal is to create an investment-grade contract lease stream. And the way you do this is by focusing on individual contract fundamentals, i.e. you don't want to pay too much for the money for the real estate. You want to make sure you own profitable locations. You want to have master leases, unit level financial reporting, really good tight documentation. And if you do that with non-investment rated or larger middle market and larger companies, you can basically create contract streams that transcend or are much superior to the credits underlying those contracts. Now, the second thing is creating the portfolio diversity, which is so important. And basically, we're getting 80% of our revenues from tenants that have less than 1% exposure to. And our top tenant is about 3% or less, actually, from an exposure perspective. And if you compare that 3% to our gross internal rate of growth, it's about the same thing, and this is totally by design.
Now, when you look at the best opportunities for growth and acquisitions for your company, where are you seeing those prime spots right now?
Well, the opportunities for growth for us are really all over. The marketplace that we're addressing is in the trillions of dollars. We have a database of tenants or potential tenants that is in excess of 10,000 companies. Today we have less than 400 of those companies as our customers. So and many of these companies don't even know that services like us, where we can be a landlord of choice and lease real estate back to them, they don't even know that exists. So our opportunity is not just to gain market share, but to really create demand.
And what are the economic indicators that you're watching as you look to shift Store Capital's strategy going forward?
You know, we had the benefit of starting this company in 2011, so when we thought about economic indicators, we're looking way into the future. So, you know, are people going to go into bank branches in the future? Are people going to, you know, how frequent are people going to go into retail establishments? So our retail exposure is less than 18% of total revenues, and that's totally, again, by design. We are very service-oriented centric in terms of our investments, service company centric. From an economic perspective, we pay attention to the economic environments, but keep in mind our leases are 15 to 20 years long. So we're going to assume that the base lease term, and that during that period of time, there'll be multiple recessions. So you have to build your leases that have lots of room for error, lots of margins for error, and you get that by having properties that have very good economic and profitable fundamentals.
Chris, thank you so much for joining us.
Thank you.
For more from REIT Week 2017, be sure to visit REIT.com.